Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, if you had the opportunity to open up my very first of all time midweek market report, that's the first time I've ever done a midweek market report in, well, since I've started this service over a decade ago. I put that out in an effort to try to calm some of the fear that I was seeing from a lot of the traders out there. And I'm starting off with the volatility index right now because this is a 20-year chart. It's a monthly chart. And the volatility index is also known as the fear index. And as you can see, this month's candle right here is second to what we saw back here in 2008. Now I want to show you some of the similarities here as I zoom in just a little bit right here. We have, again, this is month by month. We have this being the month of January, green candle. February, a longer green candle. Here we are, March, a longer green candle than that. But look at this shadow above the candle. Whenever you see long shadows above any candle, it doesn't matter if it's a volatility index or a stock or a major market index, that's telling us that the buyers tried to push it up, but the sellers came back and pounced on them. Now, remember, the volatility index is inversely related to the S&P, but people do trade the VIX. And so we have that long shadow, that's bearish for the VIX. If we go down here, this is the CCI. You can see we have a hinge there. Now, this is pretty amazing because we also have what's known as a negative divergence. Look at this. We have a higher high on the CCI, on this particular high back here in February of last year. But notice right here on the CCI, we have a lower high on a much higher price action. See this? So this is a negative divergence. Now that's bullish for the market because it's bearish for the VIX. Now as I scroll to the left here, remember that price pattern? Look right here, long green candle, followed by a longer green candle, and lo and behold, look at that. We have a nice big long shadow above that candle, and then the VIX started to pull back. So hopefully you're getting this right now as a leading indicator. I'm going to zoom in a little bit more because there's some things I want to repeat from last week. Down here, right there, that's an open gap. And if you go back and check the history of the volatility index, every single one of the gaps that have formed have eventually filled. And so that has a 100% success rate in filling. I'm not going to say it's going to do it this week or even maybe even next month, but I do believe it's eventually going to fill, hence the reason why I put this forecast down here for the VIX. I think the VIX gap down here will fill. As the VIX drops, the S&P will start to move up. All right. So let's look at the S&P right now, SPY. And this is a weekly chart as we go in and look at this. Pretty interesting week. We have a support level down here right around 240 for the S&P. This long shadow under the candle. Remember, it's going to be inversely related to the VIX. So you have that long shadow below the market is the same as having a long shadow above on the VIX. Now notice right here, that CCI is in an extremely oversold condition. Let me zoom in a little bit more for you. Go into the daily chart. This, my friends, right here, is a hammer pattern. A hammer pattern is a very bullish candle. When the shadow is 2 to 2.5 times longer than the length of the body, that's what defines a hammer. And usually you find hammer patterns at the end of downward legs. That's number one, bullish indication right there, hammer pattern. We have gaps above the market here, and a slight gap right here still needs to be filled. These price gaps will act as magnets to pull the price back up. That's bullish. We have a wide divergence from this 20-period moving average to the price. It's called the rubber band effect. Most likely the market will snap back towards that moving average. That's bullish. Volume is a leading indicator. Now, again, today, Friday the 13th, as I record this, we had lower volume than what we saw on Thursday. and that's telling us that the sellers are starting to slow down. As I go down the charts right here, stochastics, it's an oscillating indicator that is now oversold. It's starting to flatten out. I eventually believe this is going to turn up next week. And that CCI, look at that positive divergence right there. We have a lower low yesterday than we did back here, but we have a higher low on the CCI. Again, very bullish. So I would say hold on to your hats. It's going to be another interesting week. I think we'll still see roller coaster volatility, but as the fear wanes, I believe that sanity is going to creep back into the market. The president addressed the press today in the Rose Garden, brought some doctors, scientists with him, and as they're putting a stimulus package together to help small businesses, I think the market really reacted to that in a very positive way, especially towards the close. Look at the Dow. Watch this. You'll see that this is a minute-by-minute chart, and right here, right around 3:30, look at that rally right towards the close. That last half hour is pretty incredible. From 3:30 to 4, massive rally. The president was addressing the nation, and I got to tell you, it's just absolutely amazing to see this. Now, equity traders are having a so-so time. As long as you use the chart, you're going to have a good time. Investors are getting a little stressed out. Obviously, it's going to take a little while for them to recover some of these losses. But I got to tell you, option traders are having a field day. I put out a trade alert at 12:15 today for our equity traders. I'm not going to give that away because people pay for that service. But we had a trade on, and we were up 10% in 2.5 hours. We were up 10% on that trade. And so as long as you're following these charts, I think you're going to do really well. Let me erase all these lines right here. Actually, let me go back to a monthly chart because I want to show you what's happened. This is the overall trend from 2008. We're still technically in an upward trend. They're all calling bear market here, but this is not a prolonged bear market. We might just see a snap right back, test those highs. We're still in an upward trend. I'll get rid of this fan line right here. But this is the trend line. That will act as support, okay? If I go in and look at the daily chart here, that too is a hammer pattern on lower volume. The stochastics oversold. CCI starting to turn up, almost a buy signal. I will erase this to show you how that is generated. I'm going to magnify that. When this blue line crosses over that green line, that will be a buy signal, and the technical traders will act on that. Gaps above the market, looking really good. Look at the Qs. I get excited about this because, you know, I don't panic. I used to. In 2008, it was a little stressful, but we were on the right side of the market. In 1987, that's when I took my bath, and I learned from that lesson because what we're seeing right here is what I saw in 1987. So I know how to handle this market, and that's why I'm trying to guide people through this storm so they don't make the same mistakes that I did back in 1987. This is a technical market, and as long as you're following the charts, you're going to do just fine. So let me erase all these lines. Let me give you my forecast, and what I'm going to do on the Qs is I'm going to use a Fibonacci retracement tool. I don't talk about this too often, but the way you use this is you take it. If you're looking for a price target higher after a market drop, you start your line at the very high, and you open this up like an accordion, and I'm going to go to the low from yesterday and drop it. A lot of times, we pull back to the 50% retracement level on the Fibonacci's. What does that mean for the Qs? That's going to be right around 207.42 right there. So I'm guessing that we are going to rally right back up just like that. I'm going to keep an angle that more or less mirrors this angle from back here. And so the end of that line is my target, 206.51, and that is going to be right around April 16th. So I'm putting that out a ways away so that you can get some long distance forecasting from me. And remember, just stay calm, keep focused on the charts, use or incorporate good risk management principles like we teach in the 1% rule, and you'll have a good time in this market. So have a great weekend, folks. I'll talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.